11 property records broken in 2021. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee because I want to have a look at this article written by Michael Yardney about property records that were broken in 2021. But before we look at that, let's jump over here to this other screen and I want to share with you a poll that I put up a few days ago. We had over 2,200 votes. I asked the question, have you been waiting for a housing crash and how long? Now, the reason I asked that is because remember a couple of years ago when the banks were predicting 10% falls, 15% falls, pundits were on the media predicting 20, 30%. Even the RBA had modeled the implication of a 40% housing price fall here in Australia. Everyone was concerned. Everyone was worried. Some people were hoping. They were desperately hoping for a 40% housing correction. Now, was that all done simply to encourage our politicians to intervene into the economy to the extent they did? Forget about the debt. No one's talking about that anymore. Now, no one seems to care. But, yeah, that's the feeling I'm getting. So, if you've been waiting, for a property correction, if that's your only hope to get into the market, or you're afraid of making a bad investment decision, or you're trying to time the market, how long have people been waiting? 10% of those voted have been waiting 0 to 1 year. 36% have been waiting 1 year to 5 years. 22% have been waiting 5 to 10 years. 15% have been waiting 10 to 20 years. And 18% have been waiting since the 80s, guys. Now, let's look at some of the comments that you've all left here. So Ben is saying, investors need to get a decent rental return or else their mortgage is unsustainable. The house prices and rent prices go up together, but renters only have so much slack in their budget before they can't pay any more. If the government bails out mortgages to keep prices sky high, they'll have to subsidise rents as well. Mass homelessness will occur. I don't know if... we're starting to see that in certain regional areas where, just because of the tree change, people are moving to those regions, so the locals are being priced out of the market. And people are having to move somewhere else or live in tents. So I don't know if it's mass homelessness, but in certain areas you're going to have strain on the availability of stock. What are we having a look here? G1 is saying, I thought Martin North would be right, but now I doubt it. Especially... we are planning to import more immigrants and flood these small city with levels that cannot cope. Well, there are calls to have increased migration. The Property Council is one of the organisations that wants to bring more people into Australia. And generally, migration is good if your infrastructure keeps up with the additional flood of people coming here. What they should do, they should ensure that the supply of land is tied to the migration rate. And kind of hard-coded so more land is made available, so it's easier to develop. Maybe the higher the migration level, the red tape has to be reduced by councils to allow more people to build and develop. Because you've got to jump through a bloody load of hoops and BS to get anything off the ground these days. Infrastructure was only built to certain levels. It's not sustainable, but politicians only make money by bringing more people rather than investing on high-tech or manufacturing. Do we even have the technical capabilities here in Australia for high-tech or manufacturing? Are we at that level anymore? Have we lost those skills? I keep thinking back to Italy, how they kept them warship manufacturing industry going, even when it wasn't profitable, just so they wouldn't lose the skills. So, what else? A housing crash in New Zealand or Australia probably won't fall more than 10% in dollar value before the government steps in. From 7 cogs. And yeah, I mean, even if we got a 20% correction now in housing, which would be all over the media, everyone would be going nuts, we're still going to be back to levels that are still not affordable for everyone. That's the thing. Certain parts of this country now are not for normal people. They're not for average people. Australia just doesn't have enough cities. We need to get more growth happening around the country. Too big to fail. I'm not wishing for a crash, but hoping a house can be affordable. That way, it's increasingly making it impossible to plan for a decent house for a family. It really does seem to be getting to that point. And the sad thing is people are delaying jumping in for housing because of, or starting a family because they can't get a house. I mean, here's the thing, it's kind of a mixed bag. There's a whole people bitching and moaning about not being able to afford a house. But then you see where they're looking, it's completely unrealistic. I remember back we were looking at people bitching that they couldn't get a place with a 50 grand deposit in Burleigh, down the Gold Coast. You know, a really posh hipster wanker area right near the beach, where you pay $8 for an ice cream and a crappy house. You pay a lot more than $8. So, yeah, you know, you've got to be realistic. If you got 50 grand deposit, you need to go to the other side of the highway, inland near, Helensvale. Then you may be able to find a little specky there where the sun's belting down at you. But you're not going to get a little beachside shack like the 70s. So there needs to be a bit of realism there. Anyway, let's have a look at what Michael has to say about 11 records that were broken in 2021, because one of them wasn't a price correction. So after a bumpy 2020, 2021 has rewritten the property record books. From property price growth to interest rates to new home buyers to refinancing, no matter which way you look, records have been broken. Let's look at a few of them. Number one, prices rose at the fastest pace in more than 3 decades. Now, I'm just going to bring up this little chart here, guys, while I have a shot of coffee, and see if you can see something here in this chart. It's good coffee. That's our first recession we had in 28 years, guys, in nearly 30 years. In 2021, we experienced a property boom, the strength of which no one envisaged at the beginning of the year. The level of price growth has been the fastest in more than 3 decades, but in real terms, it's the third fastest in a century. Over the past year, Sydney house prices have risen over 24%, Melbourne 15%, and Brisbane 20%. Overall, dwelling prices have risen 23% in capital cities, while in the regions they've surged by 30%. Moving forward, property prices will continue to grow into 2022, but at a much slower pace. Yet I predict that in 12 months' time, new record highs will be reached in property values around Australia. So there we go. So Michael's predicting in 12 months' time we'll see new records, even if, property just growing at 6% is just not going to feel the same as a 20% increase in your property, guys. I mean, have you checked your latest valuation on your property or your portfolio? Yes, a lot of people will be really happy right now. Then, is the wealth effect affecting you? Or you're staying strong, sticking to the $1 7-Eleven coffees? Actually, talking about that, I had a bit of a trip down the Gold Coast. Instead of buying $2 7-Eleven coffees, I bought 2 $1 coffees because you actually get more coffee, maximizing your investment. So, 2, Australians became wealthier than ever before. Now, this is a big issue here. Not everyone's equal in Australia, guys. We're not an egalitarian society, and this intervention, lockdowns, has just exacerbated that. Australians became wealthier than ever before. Australian households just kept getting wealthier. A combination of surging property prices and solid share market gains saw total Aussie household wealth grow 4.4%, or $590 billion in the September quarter. Wealth is up 20.2% on a year ago, the strongest annual gain in 11.5 years. Australia's total household wealth hit an all-time high of $13.9 trillion. The wealth per person of $540,179 also sitting at record levels. And a large part of this growth in wealth is related to owning a home. That's it. The total value of all the residential property in Australia was $7.2 trillion at the end of November 2020. It grew to $8 trillion by April 2021. The year finished breaking a record. with the value of all residential property now being worth more than $9.4 trillion. So here's household wealth and liabilities. There you go. Boom. Our wealth is just shooting up. And here's the thing. This is showing you the wealth isn't going to be equally distributed. If you're working a lower skilled casual job, maybe in retail, you don't have any share investments, or your super isn't even that big, you don't have any private investments, you don't have a property, you're not going to experience any of the wealth. If anything, you probably went backwards because you couldn't work and maybe you just had to struggle to pull it together. So the lesson to take away from that is, guys, you need to skill up. The harsh reality of it is, and this is what I'm teaching my children. If you're just going to be working a shit casual job your whole life, well, you're not going to be able to to get any of the benefits of the government intervention into the economy. And there's not going to be any political will for radical change. So 3, mortgage rates hit historic lows. We know the last time the RBA raised rates was almost 12 years ago, and ever since interest rates have been falling. In 2021, low interest rates and the easy availability of finance spurred record demand for property, pushing prices higher Australia-wide. New lending and refinancing also hit all-time highs. I guess that's another record that was set. 4, record numbers of new property listings. The number of properties listed for sale on realestate.com hit a historic low in June 2021. That's not really surprising, with many vendors being nervous about the ability to sell their homes during the challenging time of on-again, off-again lockdowns. Of course, anyone actively searching for property this year would have felt the shortage of A-grade homes and investment-grade properties on the market. This lopsided supply and demand ratio is one of the reasons property values surged during the year. However, as lockdowns lifted and restrictions eased, new listings of property sales came to 22.8% in the last 3 months of the year. This made for a robust spring selling season, with new listings finishing 19.2% higher than the 5-year average. Clearly, the extraordinary price growth we experienced over the year has seen sellers responding with increased confidence to list their properties for sale. But remember, these sellers have to live somewhere, meaning many are going to upgrade their homes using the increased equity they've gained in their homes. And this means our property market will remain busy in 2022. Okay, so that's an interesting take on that. Number 5, demand for housing hits record highs. Well, no one wants to live in an apartment if you're going to be locked in it, are you? I imagine just people riding out the lockdowns in a studio. What if a couple living in a studio? That'd be a nightmare. So, this year saw many Australian families upgrade their homes, while a record number of Aussies became first home buyers. The combination of low interest rates, the impetus from shifting lifestyle preferences and influx of expats, low supply of properties for sale, forced savings. We didn't have any forced sales pretty much. Forced savings. This is the thing. Let's flash forward to 2030. The Property Council of Australia is insisting on new lockdowns to prop up the housing market. Anyway, government support measures have all fueled Australia's insatiable appetite for property to historic highs for much of this year. And this record demand at a time of low supply of property for sale has led to historic price growth. 2021 also saw a record number of first home buyers entering the market, the likes of which had not been seen since the impetus of the first home buyers grant following the global financial crisis. Property sold at record speed across the country. Another record broken in 2021 was the speed at which many properties were sold. With multiple buyers keen to purchase the limited number of good properties for sale, many were forced to make quick decisions and in some cases pay a premium to purchase their property. Looking back at the premium paid at the beginning of the year, most buyers would be very pleased with their decision. As for the records broken in November, the median number of days a property was listed on realestate.com.au before it became sold was 30 days, a historic low. Keep going down. Even auction campaigns were shortened to 2 to 3 weeks rather than the traditional 4 to 6 week selling campaign, with record auction clearance rates meaning most properties sold considerably above their reserve price. At the same time, many private sales were sold significantly above the asking price. And while there is no way of accurately measuring this, I would venture to say we had a record number of off-market sales in 2021. The year was truly a seller's market, but as 2021 came to an end, even though buyers continued to outweigh sellers, there were signs that balance may be slowly shifting as more properties came on the market for sale. Number 7, property sales volumes soared. An estimated 614,635 properties changed hands in the past 12 months, the highest level in almost 18 years. In fact, in November, property transactions were 32.6% above the decade annual average. 2021 enjoyed a perfect storm: low interest rates, fiscal and institutional support for housing, high household savings, and relatively low levels of properties for sale started the property boom of 2021 that people will be talking about for years to come. At the same time, the first weekend of December saw a record number of properties taken to auction, which resulted in record dollar values of properties transacted. There you go, guys. Look at that. Rentals finally rose. After several years of slow rental growth, in the year to November, Australian rental yields increased to 9.4%, which was the strongest annual appreciation in rent since January 2008. Look at that. That's just insane. Capital cities experienced a net loss of people. Now, will this tree change or regional relocation, will it hold? Will it hold? Will we be reading articles in 2022 about people moving back to the cities? Australia's closed borders put a halt to immigration in 2021, but tight borders didn't stop Aussies from moving house. In the March quarter, data from the ABS showed our capital cities recorded a net loss of 11,800 people, more than double the decade average, and the largest quarterly loss on record. And this was prior to the arrival of the Delta COVID variant. Many of us learned we could work remotely, which led to a net 43,000 people exiting capital cities in favour of regional areas, with more of us opting for a sea or tree change to take advantage of remote work flexibility. This was the biggest net influx to the region since the Australian Bureau of Statistics records began in 2001. Whoa. That's not going to last for long, guys. I can't see that continuing. People flooding to the regions. 10. Demand for luxury properties soared and the $3 million clubs doubled. While the value of most properties increased in 2021, the year finished with the luxury end of the market outperforming. Many reassessed their housing needs over the year, with wealthy Australians and returning expats opting for lifestyle and well-being upgrades. This meant Australia's $3 million suburb club doubled again in 2021. Over the past 12 months, the number of suburbs with a median price of $1 million doubled, with 392 new suburbs nationally joining the $1 million club. Oh, there you go. 11. Demand for regional properties soared, fueling record-breaking price growth. One of the side effects of the pandemic and the resultant lockdowns was that both net regional and interstate migration trended above long-run averages, resulting in 2021 being the year when combined regional housing markets outperformed combined capital cities in terms of price growth. Of course, that's not really a fair comparison, since there are literally hundreds of regional locations and thousands of different suburbs, each performing differently based on their individual local factors. And as the year ended, this trend had reversed, with capital cities outperforming. Okay. And that's it, guys. The 11 property records broken, according to Michael Yardney. Demand for regional properties soared, fueling record-breaking price growth. Demand for luxury property soared. $3 million club doubled. Capital cities experienced a net loss of people. Rentals finally rose. Property sales volumes soared. Property sold at record speed across the country. Demand for housing hit record highs. Record numbers of new property listings. Mortgage rate hit historic lows. Australians became wealthier than ever before. And prices rose at the fastest pace in more than 3 decades. Let's have a bit of a talk about this guy. Now, who would have expected this in 2021, particularly with all the dire news that we were seeing in 2020? Does this tell us that Australians are just property obsessed, that our property is our safe haven? And for all the people that are waiting for a crash or a correction, are you going to be able to time the market, guys? Is it just too hard? Should you have bought 5 years ago, 2 years ago, in the dip in 2020 and just rode it out? And if it's a house that you're going to live in, is negative equity going to even mean anything if you can just ride it out for a couple of years? Even if we saw a correction of 10, 20%, and perhaps some people were pushed into negative equity, interest rates went up, they're going to be able to find a way. A majority of people will be able to find a way to make ends meet. How many people haven't really had to tighten their belt yet? Sure, we had the ABC plugging the articles of bad professionals who were thankful for the mortgage holidays, but how many of them were just incompetent idiots that hadn't done their budgeting? It's the ABC, guys. They've got an agenda to push. What do you reckon? We'll have to see what 2022 holds. If property still grows, but even if it's subdued, it's going to feel a lot less crazier than this year, but that's still going to be growth. Anyway, guys, thanks for watching. Let me know your thoughts and opinions on this one in the comments down below. And check out this video about the NAB increasing interest rates that we looked at this morning. There you go, guys. Take care. Have a great day. And I will see you all in the next episode of Heise Says. It's good coffee. Instant's fine. Take care.